Breakout or fake out? That's the question, isn't it? The page you see at this moment in time is our profile page on TradingView. I'm going to be clicking on the last article that we published, which talks about breakouts or fakeouts, specifically apply to corn price action. But the reality is that we could apply it to any other market. So this is going to be a very interesting lecture where we're going to be combining technical analysis, classical patterns with order flow, but not only the order flow that is happening now, but most importantly, the order flow that has not happened yet. So let me explain. So we can see on the 8-hour chart of corn futures, we can see a falling wage. Traditional technical analysis suggests that when a breakout takes place like it happened on that particular day, typically you would expect a continuation of the breakout to the upside. Now, when that was happening, the question is, will we have continuation or not? Is it going to be a breakout or a fake out? And when the breakout was happening, notice how we had a volume delta that was clearly not only under zero, but under that peak level, which is 1.05K. So let me explain. If we look at the beginning of the formation of the wage, which is that particular bar on September 17th, all the way to the day when the breakout took place, which is October 16th, we can see the volume delta represented by the blue line. Actually, it's not only the volume delta, it's a 21 exponential moving average of the volume delta being the up volume minus the down volume. In other words, we are looking at the net effect of volume when comparing contracts that were purchased versus contracts that were sold. So notice that during the life of the wage, the highest number that we saw positive was 1.05. And while the negative delta was positive 1.05K, we never had a continuation to the upside. Right now, the breakout is happening, but as the breakout happened, we can see the value was negative minus 260. In other words, while a breakout was happening, the volume delta, which we could think about it as the net effect of volume, was actually negative, suggesting that the breakout would be a fake out and we'd probably require some sort of advertisement before moving back higher. Okay, so what did happen? What happened afterwards was precisely that, which of course is never a certainty, but that was the expectation. And as price went down and came into the green UFO, which the green UFO represents buy on field orders. So UFO stands for on field orders, in this case to buy, which is why it's green. So then those buy orders kicked in. And if you think about on field orders being filled, that is going to be new volume. Not only is going to be new volume, it's going to be new by volume, potentially bringing the volume delta back to be positive and ideally above the dotted line, the 1.05K line, which is the greatest value that was seen during the life of the wage. And therefore, if that was to happen, which it's looking like it could certainly happen any moment. So if that was to happen, then the expectation would be that the breakout would now continue and some sort of a price action like what we have on the screen would take place now, as this is the setup that we have where a trader, having done this analysis, could identify the top of this UFO as a valid place where to enter, the bottom of the UFO as a valid place to get out in case we are wrong, which could certainly happen too, even though the analysis gives us a statistical advantage is not a guarantee. And then the final UFO here on the top, which is the red color UFO, meaning that it's sell unfill orders that could be used as a target, which also coincides with the projected target out of a classical technical analysis technique when looking at the wedge and projecting. It's high to the upside. I'm calling that the target. Now, having said that, the technology also identified UFOs somewhere halfway. So a more conservative threat may decide to scale out, okay? And have some, I'm going to call it target one type of exit at that initial rate, UFO, and take maybe half of the position out or less than half of the position out. And then be in a position of less risk as price potentially travels to the final target UFO on the top of the screen. So again, the lesson here has to do with not only reading the charts and, relying on technical analysis concepts that could be useful. Of course, there are a million other ways on how to trade. Could be more fundamental, could be more quantitative. Again, I will let you to decide what works best or what your preferences are. In this case, I am trying to bring in some generic education, generic opening of the eyes for traders that may trade technical analysis patterns and get to see breakouts become fakeouts all the time and wonder why. And basically, the reason could be there was not enough steam, behind the scenes anyway. So hopefully, this video has been useful. For sure, you are welcome to go to our predictive page and follow us. So as new articles are being published, you can certainly enjoy them in a regular basis and learn from them. And for sure, more than appreciate it that you read us and, feel free to share in the comments if you have any different opinion or if you have any questions and, happy to help you guys. Take care, trade well, and be safe. Okay.